macroeconomic stability has enabled the government to provide the necessary support to people below the poverty line, micro, small, and medium enterprises in response to COVID. However, the government's ability to continue this support, particularly in the form of social protection, could be constrained amid the future waves of a pandemic. Pakistan has benefited from the debt relief and IMF's rapid fund instrument facility in the short term. However, currently, tougher decisions are still awaited as regards bringing the IMF back on track. These decisions pertain to power sector reforms, increasing tax revenue mobilization efforts, curtailing subsidies program, greater autonomy to regulators, etc. All these measures will have macroeconomic and welfare implications, which merit a discussion today. Let me, in the interest of time, very briefly introduce our panelists. Of course, I won't be doing justice with the kind of experience which the panel brings in. To start with, we are very honored for today's keynote address. Dr. Hafiz Pasha agreed. He is former Federal Minister for Finance, Government of Pakistan, and of course currently continues to remain busy in his academic endeavors. We are also joined here with Dr. Jochen Hippler, who is the country director of FES Pakistan, no stranger to Pakistan, of course. He has served several stints. He has written a lot on Pakistan. We're also honored to have with us Mr. Sakib Sherani Sahab, former economic advisor to Government of Pakistan, currently heads Macroeconomic Insights Pakistan. And of course, I'm joined by my co-organizer for today's session, Dr. Bushra Yasmin Saiba, who's head of economics department at Fatima Jinnah Women University, Islamabad. In the interest of timekeeping and just to explain the flow, I will be requesting very shortly for welcome remarks from Mr. Hippler. He's of course a panelist too. I will then request for around 15 to 20 minutes of keynote from Dr. Pasha, followed by interventions from our distinguished panelists, Mr. Sherani and Dr. Bushra. And then, of course, we want to leave adequate time for our audience participation and their views. Our audience can post their questions in the chat box. You may find me prompting only in the interest of time. But please continue the discussion or continue to remain engaged in the chat box, which is now open for you. This meeting, with your permission, will be recorded and the video will be posted online. So you are welcome to revisit this discussion later or to share it across your networks, please. Finally, the proceedings for today's meeting are expected to be inputs for two very important endeavors of the government. First is the mid-year review by the federal government, and second is the post-pandemic economic recovery strategy, for which, of course, we will be passing on the proceedings from today's discussion to the Ministry of Finance. Without ado, if I can now request for his welcome address, Dr. Jochen Hippler, who's the head of FES Pakistan. Dr. Hippler, please.
Good morning, and thank you very much, Dr. Vaqar, for the introduction of the panel. I can just tell you that I'm very pleased and very honored that FES is able to support and cooperate with SDPI. SDPI, as we all know, is doing a very important job in Pakistan in the development sector, and it is a very good experience that even under these difficult conditions with Corona, SDPI is trying to hold its annual conference, which has such a big influence in the past. So my congratulations. Let me just, being brief as well, just highlight two aspects which I think are important to keep in mind for the discussion of this important panel. The first one is that we should not forget that currently, with the Corona crisis being underway and getting worse in different parts of the world, we are witnessing a kind of multi-pronged struggle in the international scene. we have had a race to develop a vaccine in different countries. We had 200 attempts. Now the first 2 or 3, 4 or 5, it's not quite clear, are underway and the first one is already being applied now. But there was a struggle between different countries and between different companies. And the sad news was that sometimes this struggle was used as an element of international power struggle. Remember when the US government under Donald Trump was trying to monopolize vaccine development to get international advantage, both economically, politically, and medically. And it's a very good thing on the one hand that this seems to have failed. The second thing is, though, that we are also having an economic struggle behind the scenes. You know, this is not just a competition about how to deal with the virus. It's also a matter that different countries have displayed different degrees of competence or incompetence in dealing with this kind of crisis. Think about what Donald Trump and to a slightly lesser degree Boris Johnson have done in regard to the virus, weakening their own economies, weakening their own societies, while some Asian countries have done definitely much better. And obviously the Chinese economic situation now looks pretty good. So what we are seeing here is that the virus also has an international dimension in economic competition. The second point that I want to raise is that we are talking about economics, we are talking about a pandemic, meaning medicine, but we also should not forget to talk about justice. I mean, justice both on the international level and on the domestic level in so many countries. We are seeing a situation where it's not quite clear whether the industrialized countries will get the vaccine first and poorer countries will have to wait for getting their opportunity to get vaccination of the population later, which would be a very shameful kind of thing because we are talking about a human disaster and not something which should be driven by selfish interest of northern versus southern things. So I think we are also seeing a struggle about north-south dimensions, that we have to make sure that there is justice and equality and fairness in distribution, vaccination doses coming up. And the second point to that is the similar thing applies in domestic affairs. We have seen in many, many countries, including France, including the United States, that poorer people, that disadvantaged people, that people who were marginalized have much higher percentage of infection with the virus and also have much, much higher percentage of people dying from the coronavirus compared to middle class or compared to rich people in the respective countries. And my point here is that fighting the virus is not just a matter of a medical thing, as we all know, that's the point of the whole panel, but it's also a matter of social justice being necessary to deal with an approach in our own societies, both North and South, to make sure that on the one hand, the crisis of inequality, the gap between rich and poor will not be strengthened by the virus and by corona crisis. At the same time, everybody in North and South has the same opportunity of being healed later. The first healing medication has also been developed. Just last week, it will take another year to come out, and of vaccination. What we really need is equality and justice inside our society when we are dealing with the economic and the medical challenges that the coronavirus is presenting to us. Let me just finish with congratulating you to have such a wonderful panel. Everybody here, you introduced them, and I hope the others will not be disappointed if I mentioned that especially Dr. Pasha is a person whom I respect and admire for a long time, and so I'm especially happy that he, as an old friend of FAS, is participating in this important panel. Thank you very much indeed for organizing this conference.
Thank you, Dr. Hippler. Really appreciate your emphasis on equality and justice when it comes to dealing with economic and medical emergencies. Appreciate that. And as you said, and you have followed through with your own remarks about introducing Dr. Pasha. So without ado, I will be requesting Dr. Hafiz Pasha for his keynote address, please. Sir, please.
Bismillahirrahmanirrahim. My co-panelists, let me start also by congratulating SDPI for being able to host this event in such difficult conditions. I would also like to thank Dr. Hippler for an extremely useful introduction, giving us both a global as well as a national perspective on the issues related to COVID-19. Let me start by saying that we were fortunate in not having very high incidence of COVID-19 in the first round. And in fact, if you look at some of the numbers for the South Asian countries, India was the highest, unfortunately, at about 11 deaths per 100,000 population. Nepal was 6, Bangladesh 4, Pakistan also 4, and fortunately for Sri Lanka, lowest incidence of less than 1 per 100,000 population. So we are somewhere at the intermediate level of incidence. And this whole pandemic spread started, of course, in end February, reached a peak towards the end of the month of June 20, and now we have, after coming down substantially, we have seen, unfortunately, a second wave, and the incidence is reached almost 60% of the peak in June. Let me start first by focusing on the first subject in the topic, which is economic growth. Pakistan, unfortunately, has seen a significant dip in its rate of growth in the last 2 years. I mean, we reached a kind of a peak at about 5.5% in 2017-18. From there onwards, it has come down, and in 2019-20, it is clear that the impact of COVID was felt on the economy, particularly in the last quarter. However, what is not so well appreciated is that even prior to COVID, the year had begun to witness a significant fall in the growth rate. The large-scale manufacturing sector's growth had turned negative. We had seen a big failure in the cotton crop, and our exports were also showing a fall. The end result is that the preliminary estimate of the GDP growth rate for 2019-20 given to us by the Pakistan Bureau of Statistics was a negative 0.4%. Unfortunately, I have some not so very good news. The more recent data, and looking in depth at the numbers on the national income accounts, I'm sorry to inform you that our estimate is that the GDP actually fell much more, by almost 2.5% in 2019-20. In fact, PBS in its preliminary estimates has overstated the growth rate in a large number of sectors. 8 out of the 18 sectors of the economy, the growth rate has been overstated. The end result is that while they were anticipating almost a 3% growth in agriculture, it's really down to 1.3, particularly because of the cotton crop failure and also the decline in wheat output. The decline in industry is very pronounced. Instead of minus 2.6, it's minus 7.4%, particularly due to the decline in large-scale manufacturing and in electricity and gas and other sectors. Services sector has done moderately better, but still negative. So you have a situation that you have seen in 2019-20, the largest single drop in the history of Pakistan. The last time we had a negative growth rate was in 1951-52, when it fell by about 1%. Now, if my numbers are correct, the decline has been significantly more. What has been the impact during this peak period of the pandemic, given our estimate that the GDP growth rate is down to minus 2.5% over the year, it turns out that from March to June, the growth rate in the GDP was minus 10%, which is a very big drop. And the reasons for that, of course, is that the large-scale manufacturing sector plummeted by almost 25% in those 4 months. The numbers are really very, very worrying and scary. And exports simultaneously plunged also by about 26%. So there has not been yet this perception of the damage that was inflicted by COVID-19 on Pakistan's economy. Somehow or the other, the fact that the incidence of disease was less, there's also this feeling that maybe the impact on the economy was not very significant. There are one or two positives, of course, and I must highlight them because these represent the silver linings in the cloud. The first is the phenomenal growth in remittances. I mean, this has truly been an extraordinary bonus for Pakistan. Even during the peak period of COVID-19, our remittances continued to grow, in fact, by as much as 10%. And in the last 4 or 5 months, they have grown by 27%, mashallah. All thanks to our expatriate workers. And of course, we will need to diagnose the reasons and to see whether the increase is permanent or temporary in character. The other positive to us is the big decline in imports, which fell by almost 20% in the 4 months, March to June, and have since continued to decline by about 4%. The end result is an unbelievable positive development, and I thank Allah for this really positive development that has taken place, and that is that our current account deficit has turned into a surplus. Let me, while discussing this issue of growth, focus on the unfortunate plight of our agriculture. This has now been magnified and manifested in the colossal failure of the cotton crop. Today, Pakistan's cotton crop is 40% less than what it used to be almost 15 years ago. This is such a tragedy. I remember as a child, cotton used to be referred to as the silver, if not the golden fiber of Pakistan, because jute was important at that time also. The numbers are very worrying. And you know, people do not realize, many of them, that agriculture continues to be the backbone of Pakistan's economy. In direct terms, while its share is close to 20%, if you look at its forward and backward linkages with industry, with trade, with transport and banking and so on, it is estimated that even today, agriculture accounts for 39% directly or indirectly of economic activity in this country. And that is why it continues to be so important. And if we don't do well in agriculture, the direct and indirect effects on GDP are very substantial. Look at the growth rate. Between 2012-13 to 2017-18, while we all thought the growth was less, it was nevertheless 2.3%. But in the last 2 years, given my adjusted numbers, the growth rate of agriculture in 18-19 and 19-20 combined is less than 1%. 1%. And what is even more catastrophic, if I can use such a strong word, is the negative growth in the major crop sector in the last 2 years of almost 2%. And of course, this is due to the 40% decline, particularly in agriculture. But wheat output's down, we are no longer self-sufficient. We had been self-sufficient in food for 20 years. We are back again to being a deficit in food. And of course, other crops like sugarcane and so on haven't done particularly well either. One of the fundamental reasons for this failure is, of course, for the last many years has been a kind of a benign neglect of agriculture. You will be surprised perhaps to know that the water availability for agriculture has in fact somewhat diminished over the last 20 years. The cropped area, if anything, has declined somewhat. And then over the last 2-3 years, the use of fertilizers has also gone down by over 20%. So how do you think output is going to increase? I'd like to focus on one policy dimension of agriculture, and that is what has happened to the terms of trade of agriculture. Terms of trade in terms of the prices of outputs versus the prices of inputs. After 2017-18, there has been a fundamentally worsening in the terms of trade of agriculture. And this could be one of the big reasons why, given the decline in profitability, farmers have not been able to put the necessary inputs and the yields have declined. You will be surprised perhaps to know that in these 2 years, input prices have gone up by 32%. 32%. Fertilizer prices have gone up by 33%. And in particular, this is due to the big hike in gas prices, which the new government had to implement soon after its takeover. Meanwhile, output prices have gone up by only 8%. So the terms of trade in 2 years have worsened by something like 24%. This is an unbelievably worrying decline in the terms of trade to agriculture, and the returns, therefore, to the farmers have really drastically worsened. And this, of course, has all kinds of implications on rural poverty, on food security, on future migration, so on and so forth. Interestingly, the new wheat procurement price that has been set for the current crop, which is in 2021 crop, is 1,650 rupees at the federal level, applicable in Punjab and elsewhere, whereas the Sindh government has set a price of 2,000 rupees per mond. In fact, the calculations are that if we have to redress the imbalance in the terms of trade, the price of wheat should be to the farmer, the procurement price should be 1,800 rupees, which is almost exactly between the two extremes offered by different parts of Pakistan. The projected growth rate in 2021 remains low, and in fact, it's interesting that there is a wide range. The World Bank, for some reason, has become very pessimistic about growth prospects for Pakistan and says that in 2021, the growth rate will be hardly 0.5%. Well, fortunately, at least it will be positive. IMF, on the other hand, thinks it will be 1%, whereas the Asian Development Bank and the State Bank of Pakistan both are inclined to think that we might get to 2%. My own projection is that due to the second wave and what turns out to be yet another bigger cotton crop failure as indicated by the pace of arrivals, it is quite likely that the growth rate will not exceed 1%. Now, panelists and participants, over the 3-year period, 18-19 with a growth rate of 1.9, 19-20 with a negative growth rate estimated by us at -2.5, and with a potential growth rate of 1% this year, over the 3-year period, real per capita income after adjusting for population growth of Pakistan is down by 6% in real terms. This decline over a period of 3 years has never been observed in the history of our country. It is due partly to COVID and partly due to other factors relating to the structure and the performance of various parts of the economy. What has been the impact on employment and poverty? By the end of June, our estimates is that almost 5 million more workers were laid off. And to start off with, we already had over 4 million workers who were unemployed. So the number of unemployed workers doubled after the COVID-19's peak impact. Simultaneously, it is very important to remember that the bulk of the displacement of workers was in the informal sector and disproportionately impacted on female workers. Almost 70% of the workers displaced were from the informal sector. And although the labor force participation of women is only 1/4 in the compared to that of the overall labor force participation rate, it turns out that 40% of the jobs lost were probably of women in marginal occupations and jobs. And this is really very unfortunate. Over 40% of our women are second home earners in poor families. And so with the combination of lost job by the second home earner and the rise in food prices, don't be surprised if poverty has increased by 20 million people since February this year. Fastest ever unfortunate increase. The number of poor today stands in our estimates at 75 million people as compared to 55 million before the onset of COVID. What has been the response in terms of policies and actions? And this is a point that Mr. Hippler had emphasized. They need to focus on inequality reduction and maintenance of a sense of balance, justice towards the poor at this time particularly. I must say that our central bank has done a good job. Immediately after COVID-19, the central bank, State Bank of Pakistan, reduced the interest rates to something like 7% from 13.5%, quickly, which was a big move. Secondly, they have come up with a number of financing packages, particularly to provide liquidity to units under pressure and to finance the payment of wages in the transitional period by firms to workers. The total package adds up already to 1,300 billion. Well done, State Bank of Pakistan. As far as the Ministry of Finance and the government of Pakistan is concerned, here too, after March, I must credit the government for having come up with a substantially larger ASAS/BISP cash transfers program of almost 15 million beneficiaries. This is at least 3 to 4 times larger than the historical level, 12,000 rupees for 4 months. And by the end, almost 179 billion rupees have been transferred to poor families. Of course, the bad news is that the government, under the fiscal constraints that is currently operating with very little growth in revenues, has already announced a big cutback in the ASAS cash transfers program. It is being truncated by half. So this year's 7.5 million families only will be covered. This I see as a very unfortunate step, because now with the second wave, it is very unlikely that the numbers of the poor will decline. They may even increase in weeks to come. Let me now come finally and discuss in some detail issues related to the IMF. The IMF program started sometime in the middle of last year, started well, and we saw a spectacular reduction in current account deficits to even as far low down to $3 billion in 2019-20, partly aided by the fall in imports after COVID. But nevertheless, a spectacular change from $20 billion of deficit in 2017-18 to $3 billion in 2019-20, a tremendous breakthrough. And to top it all, as I mentioned earlier, the current account has gone into a wonderful surplus of over $1 billion, in the first 4 months of 2020-21. This happened, last time it happened was about 15 years ago. Now, the issue, however, is, and this is again an area which has not been emphasized upon, as I said earlier, that the impact of COVID was not fully discussed or accounted for. Within our balance of payments, we have two major areas to focus on. One is, of course, the position with regard to the current account surplus or deficit, which fortunately and wonderfully has turned positive. But we also have to look at the net inflow of capital into Pakistan. And that is reflected by the second half of the balance of payments, particularly the financial account. And here we have some bad news. And this is something which has not been adequately projected. The government has been announcing very proudly about the spectacular improvement to the current account, and they're perfectly justified in doing so, because that is no doubt a big achievement. But what has not been emphasized is the worsening in the inflow position into Pakistan of funds. During the same period of July to October 2019, we had a net positive inflow of capital of $3.5 billion. This year, in the first 4 months, the net inflow has become a net outflow, and $1.4 billion have left Pakistan. And this is something which is beginning to worry one a lot. And quickly, let me run through the reasons. First, of course, equity funds have started leaving Pakistan. Almost $300 million have left. Second, the State Bank and the commercial banks have had to discharge some of the liabilities, including in the case of State Bank, the return of the deposit of $1 billion to Saudi Arabia. The flow of project and program assistance money has also come down by about 5 to 10%. And overall, we also see in various other heads negative inflows. The only positive in this all is that foreign direct investment continues to grow, but is significantly below the level we used to see 4 to 5 years ago. Now, this is the dimension of the problem which needs to be focused on, and why we need to look at the IMF program much more intensively and carefully today. The point is that Pakistan's debt servicing liabilities on the external side have risen exponentially. In 5 years, they will have tripled. This year, 2021, which is about to start, we will have probably to service debt to the tune of almost $14 billion, close to 3 times the level 5 years ago. What has happened? With all due respects, the profligate commercial bank borrowings and the flotation of Sukuk euro bonds by the previous governments are like children coming home to roost, chicken rather. So the problem is this enormous growth in external debt repayment, amortization liabilities. How can we service them? Unfortunately, if we had had some space in 2013 when negotiated the last IMF program, we don't even have anywhere near that space today, despite a positive current account. By the way, the current account is likely, unfortunately, not to remain positive because of, unfortunately, the big rise in agricultural imports. We'll have to import a record level of cotton bales. We'll, for the first time, have to import 2.5 to 3 million tons of wheat, and there continues to be a shortage in sugar. In addition, the bad news is that thanks to this discovery of this vaccine, which Dr. Hippler referred to, Oil prices have spiraled up in few weeks from $40 to $50 a barrel. The combined effect of these developments over 21 would be close to $4 to $5 billion. And this really means that our surplus may be only transitional in character. Given this position, I am afraid, although I have myself negotiated many times with the IMF with very tough terms, particularly after the bomb, let me say that probably Pakistan has no option but to go back to the IMF program at this time. Maybe what the government is doing is, given this political confrontation, which we saw yesterday at its peak, the government is biding time for the Senate elections. And if it wins a majority, then clearly it will be in a better position to implement a tougher set of reforms. So we may have to wait for some news in terms of the return to the IMF program for some more weeks or months. Inevitably, we'll have to go back to the IMF program. We will probably have to have a large mini budget sooner or later, if anything, probably in June next year, a very hefty budget of the type that we saw in 2019-20. The circular debt problem has become a monster. It has reached 2.3 trillion rupees, and it's rising at the rate of over almost 600 billion rupees annually. Losses of the power sector have spiraled up. Capacity charges have mushroomed because of the devaluation. There is significant excess capacity, if anything, due to overinvestment in the power sector. And we are really stuck with a huge structural problem in the power sector of liquidity. And believe me, the fuel supplying companies like OGDC and Pakistan State Oil are perilously close to not being able to procure gas or oil anymore. And this could become a new kind of problem with the power sector of not having adequate supplies of fuel to be able to produce electricity. So let me conclude finally by saying, ladies and gentlemen, that we always argue that Pakistan has very little option to go back to the IMF program. I'm afraid this time it is particularly true. Given the huge exponential increase in debt servicing liabilities, we will have no other option but to go back and then hopefully find enough time to make further adjustments like we did, of course, in the current account, and implement a particularly difficult reform agenda, which I hope will be feasible given the nature of the political environment that the country faces today. Thank you very much for giving me such a significant opportunity to talk to you. Thank you, ladies and gentlemen.
Doctor, thank you so much for educating us. I think you have touched upon all the aspects of this subject very comprehensively, and I could see the conversation in the chat box as well, which remained very interactive due to, of course, the very important highlights which you have actually mentioned in your keynote address. Also, I think I'm grateful to you for decomposing for us the various pressures on economic growth going forward, and how the next, what would be the specific pressures on the next fiscal year. So let me, without ado, now move to Mr. Sakib Sherani Sahab for his inputs, please, sir.
Thank you, Dr. Vaqar, and a good morning to all of you, and Assalamu alaikum. If you'll kindly indulge me, I have a slight 2 or 3 slide presentation to share, so I'll just put that on the screen.
Access there, screen access there.
I have it. So I think this is a good time to transit into talking about the IMF program design. Dr. Pasha has laid out very well the need for reform, but also, unfortunately, the need for going back to the IMF. And both Dr. Pasha and myself and Vaqar, Dr. Vaqar as well, we've critiqued the IMF program design many times in the past. Even in the best of times, we found that the IMF program design is not well suited for a quick transition from stabilization to growth. And it's, the key elements of the fund program design are not suited to that. So we'll quickly, one slide, if I can just take you through what the key characteristics of a fund program are, a standard fund program. So it's obviously pro-cyclical. Countries go to the fund when they already have a full-blown balance of payments crisis, and that has induced a slowdown in the economy in terms of growth. And obviously, the IMF policies are meant to choke imports primarily and build up the foreign exchange reserve. So they tend to reinforce the growth slowdown in the economy by being pro-cyclical. And then typically they are non-gradualist, right? So they introduce front-loaded macroeconomic adjustment, and that provides a shock therapy to the economy, which takes several years to recover from. And then, of course, the IMF, as we all know, stands for it's mostly fiscal. So therefore, the entire program revolves around an emphasis on price adjustments and withdrawal of blanket subsidies. But mind you, when we say blanket subsidies, a significant portion of these subsidies are also going to, in a sense, they're targeted because they're going to the most vulnerable and the less affluent sections of the of society. So these have to be dismantled, and there is a general forced austerity which reinforces or reduces the policy latitude for the government to come back to growth and reinforces the tendency for the economy to remain in a low growth equilibrium. And then, of course, something which I brought about in, since earlier this year in my write-ups and at the State Bank as well, that the question of why private firms have to bear the brunt of the macroeconomic adjustment when the macroeconomic framework was out of whack. So it's not because of their own fault or their own excesses that the economy tipped into recession or tipped into a balance of payments crisis. Unfortunately, the IMF program imposes Schumpeter's creative destruction on private firms, and in fact, large parts of the economy, in the hope that they will rebuild. But as we know, this always doesn't happen. So this is the standard IMF program design, which is anti-growth. And now we have an IMF program design that needs to respond to COVID-19, to a huge crisis, a health crisis or health-induced crisis, which Pakistan or the global economy have not experienced for, the global economy has not experienced this for the past 100 years or so. So the priorities are absolutely antithetical to the priorities of an IMF, a standard IMF program design, because the primary, if you like, objectives of the policy response need to be the preservation of jobs and businesses, because we cannot allow a large part of our business or a large part of our firms to go under. Because that is what we call, introduce hystericis into the economy. We will have, a permanent loss of productive capacity. This situation also calls for fiscal support by the government. And I may disagree slightly with Dr. Pasha on whether the Ministry of Finance has really stepped up to the plate or not. The State Bank of Pakistan has followed an excellent template. But the Ministry of Finance has, I think, done lip service, and except for the enhancement in the SARS program for a while, I think they, a large part of their policy stimulus on paper has not even been drawn or has not been released. So we know about 50% of this has not really been drawn upon. So I think we need greater fiscal support, but the IMF program would constrain us. We also need accommodative monetary conditions for longer. because businesses really need that support or the continuation of that support from the central bank. And then very importantly, we also require regulatory and debt forbearance. So the State Bank of Pakistan has put in place debt forbearance for firms, domestic firms, but we need debt forbearance both from international institutions as well as to provide for longer to our domestic firms. But we also need regulatory forbearance, and I think that's really important. And to that, I would add that would probably include the intrusive nature of the predatory taxation, which the FBR is forced to undertake under IMF programs. So that's really important. Unfortunately, if we go back to the IMF program, we will need to go back to a situation where the FBR is taxing or overtaxing the formal sector in Pakistan at a time when they need this forbearance and relief. Of course, we also need, in responding to the COVID-19 situation, we need higher spending on health, and we need to create that fiscal space in our budget, and we need a continuation of the expanded social safety nets. So, beyond 4 months is something that really the current situation requires, especially with the kind of numbers Dr. Pasha has pointed to in terms of the incremental increase or the phenomenal increase in unemployment and the poverty levels in Pakistan. So the final sort of slide, I would posit that we need to redesign the IMF program in the best of circumstances. And the good news is that the IMF has been engaging with some of us, the Independent Evaluation Office and the IMF itself, on how this program design what shape it can take. So in my view, in the current circumstances, I think we need a greater allowance from the IMF for heterodox policies, not just for Pakistan, but I think across the board. And primarily, when I say heterodox policies in our context, it would mean that if we face a fiscal constraint and we need to borrow, the government needs to borrow from the central bank for short periods, I think that should be allowed under the program. We need less, for the next 1 or 2 years, we need less front loading of the fiscal adjustment and a more back loading of the fiscal adjustment. So these are the kind of heterodox policies that we may require under the IMF program. We need increased forbearance from them. And also, I think, very importantly, we need less macroeconomic adjustment conditionality and more structural conditionality. Because Pakistan's problems and the reason we go to the IMF program are structural. I personally debunk this, twin deficit hypothesis, and what the thinking that flows from that is that Pakistan goes to the IMF because the fiscal deficit gets out of whack. The fiscal deficit goes out of whack because we do not collect enough taxes. Our tax to GDP ratio is not large enough. More importantly, the reason we go to the IMF every 5 to 7 years or 7 to 10 years is because we have a balance of payments crisis, and the genesis of that crisis is that we have an export sector which is only 7% of GDP. So these are structural issues. They require structural responses, and for that we need a structural conditionality program, which is front-loaded disbursement and back-loaded structural conditionality. So we don't get, because by definition, we cannot be judged every 3 months. If we embark upon a structural program, we should be, for example, if we need to reform FPR, then the results of that will only come in about 3 to 4 years. So the program will have to judge us in a back-loaded fashion. And flowing from that, the program cannot be a 3-year program. If it's built on structural conditionality, it will have to be a 4-year program. Ideally, it should have been longer program, but it cannot be because of the election cycle. So there is this risk that the new government will not be able to or will not continue with the conditionality. Therefore, a 4-year tenure is ideal because it allows for structural conditionality and it allows for one current government, incumbent government, to complete the program. So I think an increased tenure is important, and perhaps most importantly, there needs to be an alignment of social safety nets with the actual burden of adjustment. What we found in many, many programs that I've studied and I've critiqued in the past as well, that SR's programs are good for the COVID-19 situation. They do not really cover the people who are most affected by the conditionality of an IMF program. Because that is the lower middle class and the middle class that gets affected by the increase in utility tariffs, the increase in petroleum prices. They are at ground zero in terms of the burden of adjustment, and they are missed out by the social safety nets of the government and the IMF. So I think we need to align the safety nets with the burden of adjustment. Thank you, Vaqar. I look forward to any questions.
Thank you indeed, Sakib Saab, for enlightening us. I think you've really gone to the core of the way IMF designs their program, and you've offered interventions towards redesigning it, and of course an allowance for heterodox policies. So thank you very much. I'm sure there'll be some discussion on this. I can already see a lot of good questions coming in through our chat box. Our panelists are free to answer them in the chat if they like, or at the end. I'm also seeing a lot of good traction on the Facebook Live. So very happy to see all of you over here. With this, let me now move on to our next panelist and invite Dr. Bushra Yasmin Saiba.
Thank you, Dr. Vaqar. Thank you so much. Let me share my slide first. My slides are visible?
Yes.
Okay, thank you. First of all, I would like to thank you, the SDPI, for giving Fatma Jinnah Women University the opportunity to organize these sessions and join hand as knowledge partner. So thank you so much. As Dr. Pasha has elaborated on economic growth and Mr. Sakib Sherani on the International Monetary Fund program, I would like to focus on the social protection. Since large of our audience here is the students, so I would like to start from some textbook definition of the social protection for them. Social protection is a provision by society to individuals and households through public and collective programs that granting them a minimum standard of living. And every member of the society actually is entitled to have social security. If you look at the ILO Convention on Minimum Standard of Social Security, this is comprised of three significant factors: the livelihood protection, the health-related matters, and the benefits for the families with children. And the effective social protection programs actually provide employment opportunities, this minimize the loss to human capital, and protect the families from falling in further poverty in case of shocks like this pandemic, by improved aggregate productivity of the household and by stimulating aggregate demand. And generally it is considered to be the state's responsibility to extend and monitor such programs. However, the social protection programs should not be static. They should be dynamic and sustainable. So there are certain short-term interventions and long-term planning. Those are required not only to be governed by the government, but also to be taken care of by all of its stakeholders, especially in this time of such shocks like this pandemic. Looking at the facts and figures on the social protection, according to Asian Development Bank estimate, the total spending of Pakistan on social protection is less than 3% of GDP for poor population. And if you look at the social protection index, Pakistan stands with a score at 0.047, that is lower than the South Asian countries average, that is 0.061. And regarding social protection indicators, overall Pakistan score is 1.40, with social insurance having scored 0.3, and social assistance and labor market very nominal figures are there. So a country where 56% of the household are classified as vulnerable. So this vulnerability become much more acute in the case of such shocks. And the social protection schemes are generally designed to decrease the risk intensity during such these type of shocks. For the formal sector, as a result of such shock, the social security is supposed to be accompanied with social assistance, insurance, and health insurance program. While for the informal sector, social safety nets are here, which are some short-term and ad hoc emergency programs like food program, food support, employment program, cash transfer, social welfare, and others. Looking at the social protection programs in Pakistan, according to a study recently published on the assessment of these programs, this is given provided that the largely these are employed based and exclude informal sector. Secondly, these have gender and rural urban bias. And according to South Asian Network, this month report, obviously the crisis has intensified the gender disparities, as Dr. Pasha also pointed out. For youth, this pandemic hit the hard in three areas: in education and training, school to work transition, and job and business. And women employment was at a larger risk in this time as compared to men. Why? Because due to downturn of the service sector, and why? Because the large proportion of the women were working in the frontline occupation of health and social care. So overall, social protection programs were working less than its potential, and according to World Bank, only 2 to 3% of the total population is being covered with this program in a country where 25% of the population are living below poverty line. So the existing capacity of such programs and for rapid assistance provision, especially in the face of these shocks, are very limited. And informal sector workers, daily wage earners, migrants, and women, they are supposed to be at the center of such a program. But then here comes the finances issues. And if I look at the education sector, if the current financial austerity persists, I see many can leave academia, and this will be like an irreversible blow to the education, especially in the science subject. Why? Because when we were moving toward the online and hybrid mode for teaching and research, and the subject, those required the laboratory work, face big challenge from the quality point of view. And this challenge is not limited to the postgraduate jobs, rather this is also a threat to the pre-graduate education. And what will be happen, either the education system will bounce back or student will keep on preferring having the online system, maybe at low cost and at their own location of their convenience. These all questions are required to be answered. And why? Because these are directly related to the productivity of the future human capital. And human capital, we know, is the backbone of our economic growth. And social protection program has very much intensity and the potential to support the education sector, but largely the education sector has remained a secondary objective in our social protection program. There were certain inventions and short-term strategies from the government of Pakistan, and they have provided it's ranging from taking protection to halt the community spread, and then introducing an economic stimulus package worth 1.2% of GDP as the figure provided by the government from time to time, introduction of certain reliefs, and then most importantly, increasing the fund for National Disaster Management Authority, that is the central focal authority to combat COVID-19. And then as identified by Dr. Pasha, State Bank of Pakistan adopted a timely set of measures, including lowering policy rate and refinancing facilities and other. And our authorities are as well committed to implement growth friendly and inclusive policies with the structural reforms in future time period. But the challenge, this challenge of the COVID-19 is much more harsher as compared to the intervention so far have been taking place by the government. When we look at the World Bank at IMF, there was support as well, and World Bank approved $500 million program to improve access to the quality education, support economic opportunities for women, and strengthening the social safety net. And there was another shift program to support the policy reforms to help Pakistan to face this challenge of COVID-19, its emergency response. And from IMF, under rapid financing instrument, there was a disbursement of US $1.3 billion to address economic impact of COVID-19. And the authorities are committed to implement the policies in existing extended facility. What we have to see here is that the scenario for foreign investment. So I would like to shed a bit light on the foreign investment scenario. In the first quarter of 2019, 20 FDI and worker remittance remained unaffected, and as Pasha provided that 27% increase in remittances we have seen even after this pandemic. During this pandemic, earlier regarding foreign investment, Pakistan managed to attract foreign investment by lucrative investment opportunities. However, the pace was turned down and foreign investment declined in March 2020 after the outbreak of coronavirus by a huge amount. It's the global trend. There was a conservative drop in global FTI from 15 to -15, and according to UNCTAD revised forecast, it can be from -30 to -40 in 2020 and 2021. So country face serious challenge on public sector development program that put further pressure on the finances. And looking at the current situation, we feel ourselves far from restabilizing the economy very soon. Coming to the recommendations and interventions, cash transfer program for social protection program stands first, obviously. Why? Because cash is neutral and it doesn't distort what people purchase. And the fiscal stimulus can smooth negative macroeconomic shocks by directly providing the support to families with high margin propensity to consume, and in this time period especially. Pakistan ranked one of the top countries in Asia according to UNICEF UN International Policy Center. In a conference, they declared that it was good performance among the good performing countries in the face of COVID. Particularly through a SAS emergency cash program. They paid over 15 million household, and $1.25 billion safety net program was rolled out quickly in the short time period for the hardest hit families. As well, there was a digitalization move. They combined phone, net connectivity, and national ID that enabled them to introduce a digital demand-based social protection system and supported those people which were suffering from the pandemic by providing them direct cash provisions. But we need to expand welfare provision beyond cash transfer. In IMF Finance and Development Report, they have given the example for our neighboring countries in India and Bangladesh. There were right-based welfare system and a public distribution system, National Employment Guarantee Act, and Public Work Program. And these programs were designed in a manner that has provided the protection to the household in the time of this pandemic. So we can revitalize our program from that direction as well. Then another thing is social risk management strategy that is very much important here, because most of our programs are designed as safety nets and they are ineffective to increase the expected outcome. Either they are not initiated in time or a distribution mechanism is not extended and exhausted. This may lack poor growth and then consequently have not trickle down effect. And safety nets designed before the occurrence of any calamity have a larger effect in the case of the crisis, but it needs to be further adopted as essential part of the protection policy. The implementation of a national disaster risk management framework should be at all levels, not only at the federal, but provincial, regional, district, and municipal level as well. After 18th Amendment, we know a substantial portion of social welfare provision in healthcare and education particularly has been given to the provinces, but provinces lack the resources, to address COVID challenge for welfare provision effectively. So here come the fiscal decentralization that is required from moderate to high level to tackle these shocks. Then we should have some global educational security, because mostly I'm talking about the education and health sector point of view. So as we have a global health security index that provides the international preparedness for epidemics and pandemic, where world score is 40.2 and Pakistan stand at 105 out of 190 country with a score of 35.5. There should be some global educational security index as well. But as I already mentioned, that education has remained a secondary objective in our social protection program for cash transfer, public works, and school feeding. So we need to increase the outreach of existing scheme for vulnerable groups. Education subsidies and fee waivers can be there. Then long-term funding, institutional coordination, and support for capacity building is another option. Additional incentives should be there, and social protection interventions must be informed by risk and vulnerability assessment. And we need to reassess and evaluate the existing policies and program of social protection from their outreach point of view. And finally, the focus on foreign investment and in infrastructure facilities, particularly for education sector. With the fourth industrial revolution and technological evolution, the world has seen a progressive move toward digitalization. And we know the countries, those were equipped with sound technologies, they handle the issue of COVID-19 more effectively, both in the education and health sector. And a country with a scanty performance indicator of 1% of GDP health expenditure and 2% of education expenditure, and standing at 150 out of 180 countries in Human Development Index, the situation seems to be very much challenging. Although the health sector is a top priority of our government, and a number of measures were taken before pandemic, but before these were fully materialized, the COVID-19 was here. So year 2020 appeared not only as a challenge, but also an opportunity. Moving towards fourth industrial revolution, especially for education sector. And then investment in health and education sector also seem to be a least priority by the foreign investment. So specific incentives for foreign investment in both of these sectors with improved technology is one option, and technological infrastructure in these sectors are actually required for a sustainable future. Either domestic resources can be diverted to e-health, e-learning, or e-delivery, but we know there are the finances constrained. So the promotion of foreign investment in these sectors is a big task ahead. And from that perspective, other than continuing existing liberalization, promotion, and facilitation strategy for foreign investment, we need to align and streamline new investment opportunities given these shocks for sustainable future. So investment in e-health services, e-business, e-learning, and e-commerce firms are the potential sector to look for. That's all from my side. Thank you so much, Dr.
Thank you, Dr. Saba. Thank you very much, Dr. Saba. Really appreciate your inputs here and how you have highlighted the need to focus on attracting foreign investment during as well as in post-pandemic times. Also appreciate your focus on social risk management strategy. Thank you indeed. With this, before I go to the final round of our interventions from the panelists, and this will be briefer interventions, maybe we could collect some questions live. We do see some questions have already been typed in the chat box, but in case I do see some hands up, so let me invite them. I see Dr. Alia Khan's hand, so let me invite Dr. Alia first for her interventions, please. Dr. Saba.
Ji, can you hear me?
Yes.
Okay. Thank you, Dr. Hafiz, Pasha, Sakib, Sherani Saab, and Dr. Bushra for giving a very stark but true picture of the Pakistan economy at this moment in time and going ahead. My question is about the IMF program that both of you alluded to in terms of, and especially Sakib Saab, you alluded to the fact that its terms should be renegotiated. Now, my worry is that how much room do we have at this point in time with such a huge debt servicing burden to renegotiate terms? And I would also like to ask that how do you see the trade-off between the want of an ever-expanding potential beneficiary pool for social protection and the fiscal constraints that Pakistan has? Can we use the success of the ESAS program to maneuver the IMF program in some way to our advantage? Thank you.
Sure. Before Dr. Pasha and Sakib Saab respond, let me take one more question. I see Mr. Mudassir Tahir Sahab, please. Ji Mudassir Sahab. I don't think we can hear you, Mudassir Sahab. Okay, so we let Dr. Pasha and Sakib Saab respond to that, please.
Okay, let me go first. You know, both Sakib and I have had some history of negotiating with the IMF programs, and as I told you, I had to, with my hands tied, try and negotiate a program with the IMF after the bomb explosions. Now, the question is, you see, the managing director of the IMF has been making all the right kind of statements, and very much in line with what Dr. Hippler has been talking about in the introductory statement, the need for focusing on the human dimension of the crisis, both financial and, of course, the health crisis. But somehow the other, the much more conventional sort of straight line thinking of the kind that Sakib described in designing of the package seems to be the case in Pakistan. Some of that may well be due to the dimension of the problem. I mean, really, Pakistan's balance of payments have become, once again, quite unsustainable. And this enormous growth in our debt servicing obligations, and that too, you know, they could be even worse, but for the prospects of some rollover by the Chinese in terms of the loans. I mean, just today, there is a headline saying that Saudi Arabia wants 2 billion back quickly, and that we will have to go for some kind of a special facility in terms of trying to compensate for that with the Chinese government. Perhaps a kind of a fund facility. So, on the one hand, you have an economy which just is not performing. Exports have continued to fall. Agriculture is in deep trouble. You have a situation where your reserve position is on paper may appear to be good in terms of $13 billion, but let me tell you some facts about the reserves. They include $4.7 billion of deposits by Saudi Arabia, by China, and of course by UAE. And most of this, at least the Saudi and the UAE part, will have to be returned fairly soon. Then something which is not so well known, and I, of course, because this is a closed group, I can say this, almost $5 billion of short-term borrowing from foreign currency deposits of the commercial banks is part of your reserves, state banks' reserves. I mean, this is scary. I remember our experience in '98 when we were told something similar. So your real reserves are depleted and artificially bolstered through borrowings. The question is, in this kind of a crisis in the making situation, how much space can be asked for from the IMF? And look at the fiscal side. I mean, it's really shocking what has happened to revenues. 2 years ago, revenues, our tax revenues had reached 13% of the GDP. Now they're down to 11.6% last year. And the only reason why our fiscal deficit came down was because of the bonus of high state bank profits last year, all-time record because of high interest rates. Today, in the first 3 months, in fact, possibly now 4 months, there has been a zero growth in revenues, zero growth in federal revenues. And within 4 months, our deficit is 0.7% more of the GDP than it was in the previous year, when we ended up with a deficit of 8.1% of the GDP. I mean, if there is any bad news, there is all this bad news. I mean, the only good news which the government talks about is the surplus in the current account, yes. But even that is likely to vanish because of higher agricultural and oil imports. So I'm afraid the fund may probably not be willing to present that human face to the adjustment process which the MD is talking about in the Pakistani context. We will have to negotiate extremely well. And let me make a humble suggestion. I would like to advise, given the beautiful way which Sakib described IMF programs and how they need to be changed, I would please forward a request to the Ministry of Finance that Sakib Sherani should be included in the negotiations with the IMF. He will do a very good job. So that's my response.
Sakib sir, do you accept the offer?
Well, in the cause of national duty, of course. And I think the fact that, the fact that Dr. Pasha and I've seen that, and we've critiqued as well, I think our negotiations, generally, our negotiating positions could have been better. Of course, I agree. It's a very good question, Dr. Alia, by the way, and I think there was another question that I responded to in the chat as well. We do recognize that our situation is dire, and therefore our negotiating position is not that great. But I think there is a realization, and that's a really silver lining in the cloud. As Dr. Pasha said, the MD IMF has made the right noises, but and once again, given the fact this is hopefully that we are speaking in the Chatham House, under Chatham House rules, the Independent Evaluation Office has reached out to me, for example, and they have been working on, so there is a recognition within the IMF that the program design is not suited to the current situations and has led to repeated failures. So there was a question of why do IMF programs fail in the case of Pakistan? So I think let me just, if you give me a minute, let me just put that in context. It's not entirely due to the IMF's fault, obviously. I would, split it into two parts. The culpability of going to the IMF or coming to a situation where we require an IMF program, that is entirely Pakistan's fault. Our economic management has been so bad under every kind of government, military, civilian, technocratic. It's unfortunate. And going back to the 1990s, that we've required these periodic IMF programs. Pakistan is not Latin America, where terms of trade shocks have led to, in the 80s and 70s, led to countries going to the IMF. And then later it was their debt problem. Pakistan's going to the IMF or going into balance of payments crisis has been entirely endogenous. It's the bad economic management of our economic managers that has led us there. But once we go to the IMF, the culpability for failed programs lies equally on the fund and on Pakistan. On Pakistani policymakers, because as soon as we get a couple of tranches in the past, as soon as confidence in the markets has returned, as soon as our foreign exchange reserves are built up, we've wiggled out of our commitments to the IMF and are wiggled out of our reform plans. So that part of the culpability rests on us, but the rest of it, the failure of the program design of the program is entirely due to program design weaknesses, which I've listed in my presentation. So I think it's a mix and match, but largely I think Pakistan also needs to look inward and be introverted and say, look, a large part of this failure is due to the fact that we're not clear about how to manage the economy and about a clear roadmap for reforms in Pakistan.
Thank you, Sakib Saab. Dr. Hippler, one of the questions that I wanted to request you to respond was around building back better. And we received this on the Facebook Live. The question is with regards to the developed countries' capacity now going forward and their commitment to the financing of SDGs. And whether they will continue to commit to that level of financing, or probably this is, or see this as an opportunity to enhance that financing going forward. That's one. And of course, the second was also around the G20's commitment to continue the debt relief for the poor countries, whether that will be possible for the taxpayers to agree to in the advanced countries or not. So I will let you respond to both these questions, please.
Well, let me start with the first one. I think the industrialized countries, mostly Western countries, are in a very complicated situation as well. On the one hand, there have been incredible debt-driven spending sprees in this year. Just the German government just borrowed another 180 billion euros to deal with the crisis of Corona at hand. Basically, not so much in the medical sector, but trying to support businesses which are threatened by lockdowns and by the economic declines. The Eurozone will have a reduction probably this year by approximately 7.5% in economic strength. So we have a situation where the economy is a bit fragile. Spending has been increased tremendously. And the interesting thing is, if you look at both sides of the Atlantic, in both sides you have quite huge spending plans, deficit finance spending, but at the same time you have very different approaches to governance. That in most part of continental Europe, you have a relatively successful management of the situation after some bungling up in spring, while in North America and in Britain, the governance has not been very impressive and the results have been quite fragile. The point I'm saying is that on the one hand, the industrialized world will be very careful not to commit additional funds to third world countries in general, when they are actually overextending their own deficit spending that they are doing in their self-perception. I mean, I'm not talking myself, I'm just summarizing some thinking that I get from Europe. So, spending unprecedented, huge amounts of money for stabilizing the Western economy, the industrialized economy, seems to mean that there is less money available that these governments want to spend in the third world. At the other hand, there is this kind of catch-22 situation that these governments do understand that it's a pandemic and not a national kind of crisis. And if you want to overcome the coronavirus, then you cannot do it nationally, you have also do it internationally, including in the third world. Some of these viruses have been introduced from places like Egypt or others to Europe. So if you are not able to also deal with the crisis successfully in the third world, then it will probably be very difficult to solve it in Europe, at least for the next 1 or 2 years, because vaccination will take quite a bit of time. So what I'm trying to say is that, Western governments are kind of pushed back and forth. On the one hand, they feel uncomfortable having these huge amounts, unprecedented amounts of money borrowed in just a few months. On the other hand, they need that they have support third world countries as well as a precondition to dealing with the corona crisis globally, because you cannot do it nationally yourself. So it's very difficult to predict. It has to do with domestic things in the US after the Trump administration. It will be much more difficult politically to raise money to support third world countries, while in Europe, the possibility is definitely much bigger. Just 2 days ago, the German Chancellor has offered another 500 million euro for supporting corona programs in the third world.
Thank you, Dr. Hippler, for taking this question and explaining in detail. So Dr. Bushra, I see at least 2 questions for you in the chat box. If you can respond them maybe in the next minute or so, and if you can leave the final minute for me for the wrap up.
Thank you, Dr. Vaqar. Yes, I have seen there are 2 questions. One is about Zakat as a potential contributor in the period of the dynamic chest. Definitely that was there, and a number of people were helping from that from the Zakat mode in this time period to the people who were in need of that. The second question was about the rural structure and the social safety program in the rural sector. So we know that other than agriculture in the rural sector, 75.6% come under the informal sector, and informal sectors are not that much covered with the social protection program. So that is a big challenge for us, definitely. And these are the recommendations which I have already given, that other than direct cash transfer programs, we need to expand the social welfare provision for the rural areas and especially to the informal sector. That's all. Thank you.
Thank you, Dr. Sarba. So not only I take this opportunity to thank all my esteemed panelists, our keynote speaker, our audience who have been very engaging in this chat box as well as on Facebook Live. Just a couple of points to leave us with. Of course, I think there was a good discussion on how growth and social justice would form the pillars of any post-pandemic recovery strategy. That's one. The other 2 or 3 things which I believe from my side we should also submit is, of course, extreme care which needs to be exercised with regards to sequence of our upcoming debt repayments, even after the G20 facility is over. We also see that in terms of analysis, economic analysis and response, going beyond a second wave, of course, both Ministry of Finance and the Central Bank, we need to keep a close eye on health sector indicators, not just the economic, not just seeing how the economic indicators behave. And we've already submitted how the macro forecasting tools at both institutions need to be informed more by epidemiological data, which is now available with Pakistani institutions like Aga Khan University and others. The role of provincial governments would be very important in any recovery strategy. And we feel not only a focus on growth, but also how provincial governments can become partners in increased resource mobilization is also something which needs to be discussed in the coming days. The government has also been advised lately about working more closely with the development partners other than the IMF, and of particular concern has been a couple of large development assistance programs which have recently been downgraded. These were supports towards COVID-19. However, the reasons cited by the development partners for downgrading these programs were procedural delays, which of course government needs to take care of. Then finally, the second wave could threaten the resilience of Pakistan's financial sector. if the incidence of the pandemic is prolonged, private sector businesses who are able to get refinance and several other opportunities to defer the borrowed amounts, these opportunities or this luxury may not be available for the following year, and their defaulting could result in heightened vulnerabilities for the banking sector. With this, let me once again thank Dr. Hafiz Pasha, Mr. Sakib Sherani, Dr. Jochen Hippler, and Dr. Bushra Yasmin for their very valued inputs. We will continue to receive comments and inputs on our website regarding this session, or if anything further our attendees would like to add. Thank you to all of you.